On Tuesday, BP reported earnings of $3 billion for the fourth quarter on the back of strong gas trading, beating analyst expectations. Annual profit came in at $13.8 billion. That's its second highest in more than a decade. The company has also committed to $3.5 billion worth of share buybacks over the first half of 2024, sending its shares up around 5%. But BP's stock has lagged behind its rivals as its pledge to transform into a clean energy provider has failed to convince investors. On Wednesday, Total Energies posted a 31% drop in fourth quarter earnings to $5.23 billion, slightly lower than expected. Weaker oil and gas prices combined with shrinking refining margins. Despite the disappointing quarterly results, the French energy major said it would increase its dividend by 7% for the year ahead and keep its share repurchase program at $2 billion in the first quarter. Last week, ExxonMobil, Chevron and Shell had also boosted investor payouts as they reported their second highest annual profits. The five super majors together spent around $114 billion in 2023 on dividends and share buybacks. And analysts expected the companies to pay even higher distributions this year, despite weaker commodity market prices leading to lower profits. For more on this, let's go to Noah Brenner. He's an executive editor for operations at Energy Intelligence in London. Thank you very much for being with us today. So, the second highest profit in a decade for BP. What are the main drivers behind that, I wonder?
Well, I mean, as you pointed out earlier in the segment, that strong gas trading result. Now, that was in the fourth quarter. But I mean, really, when we come back to what's driving these strong earnings, it was that core oil and gas business, and in particular, the oil side of that business, I would say. We saw production up a couple of percent in the fourth quarter. And while prices are nowhere near where they might have been, say, a year ago, they still are quite lucrative for companies that have done quite a bit to lower the amount of capital that they're spending per barrel to get that oil out of the ground.
Interesting. We have seen a lot of volatility, right, in oil and gas markets over the last couple of years. So many geopolitical disruptions as well, unfortunately. What's your outlook for oil prices and what does it mean for BP future profits?
Sure. So our outlook here at Energy Intelligence is right around where we are today. We think oil prices are going to average about $80 in the first quarter, and then we see the potential for that to move higher later on in the year, up to about 85. On average, we see prices at about $83 through 2024. Now, again, obviously lower than they might have been, lower than even some might have predicted, just given the amount of geopolitical turmoil that we see, and quite honestly, a fairly decent economic outlook globally. But when you come back down to it, this is a very comfortable place for many of these companies to be operating. At this level, they can post pretty significant profits. Like you said, it's their second largest. I think in the last 10 years. And they see this as being really a sweet spot where they can continue to increase that level of shareholder return, which is being demanded by the market, and still have the money they need to invest, whether that's in their traditional businesses or in those transition areas.
Right. What about the pledge to reduce oil and gas production by 25%, that's by 2030? And I ask you because there's been a lot of debate around that, and I wonder, can you help us understand more about it? Can you summarize it for us? But also, is it feasible?
Well, it's a really unique pledge among the oil majors. BP is the only company that's planning on letting their production decline through to 2030, and they've already stepped that plan back once. If you remember back in February, former CEO Bernard Looney took what was originally BP's plan to cut production by 40% through to 2030 and ramp that back to 25%. Now, the new CEO, Murray Auchincloss, has said that he wants to be flexible, that he wants to be pragmatic, and to respond to what society is telling him around the demand for oil. And so do we see the potential for maybe BP to walk that back a little bit further? Sure, I think it's there. The way BP is positioning its production profile, it's actually going to grow production a little bit for the next couple of years, and then kind of make a decision around will it sanction and move ahead with the types of big projects that are needed, or will it kind of take its foot off the gas and allow production to decline. So they certainly can meet that target if they would like to. I think the real thing to watch is going to be the signals from investors and what investors say they would like the company to do, because it has underperformed over the past 5 years relative to its peers.